Good. So one of the reasons that has influenced the developments in the recent month, as we heard it from Mike also, is the emergence and activity of institutional investors. Therefore, we will take a closer look at this aspect. And I'm pleased to welcome David Olsson, who will discuss this topic together with David Wachsman. So welcome both David and David Wachsman. Please take over.
Thank you so much, Nicolo. It is great to be here. Unfortunately, we can't be in Switzerland today, but certainly next year in 2022. My name is David Wachsman, for all of you who don't know me, and I'm the CEO of the largest communications firm in the industry. We've been around for about 6 years now, and have worked with many of the blue chips throughout the space. I'm pleased today to be speaking with David Olsson, who's Vice President for Europe and Asia at BlockFi. And David, before we go into your personal background, for those of the audience members who don't know about BlockFi, can you tell them a little bit about its origin story? Just to put it out there, BlockFi was best known as a collateralized lender, but it's evolved into being much more.
Yeah, correct. Thanks, David, and thanks, Nicolo. It's great to be here. It's a bit like a homecoming after working for Credit Suisse for such a long time without actually being in Switzerland. So BlockFi, as you said, started out really sort of scratching our founder, Zach Prince, scratching his own itch in terms of he was an early investor in Bitcoin. He didn't want to sell it. He saw that there were no financial services or lending capabilities in the space. So thought it'd be a good idea to start a firm that could lend against hodlers' holdings of Bitcoin. So that they wouldn't have to crystallize tax and other consequences of selling, not alone, obviously not participating in the upside. So that was the genesis of the firm, and we quickly moved into an array of financial services in the crypto space. So now our retail clients can borrow with crypto-backed loans. They can place crypto with us to earn a yield, and they can trade between fiat and crypto or crypto to crypto. On the institutional side, which I'm most closely associated with, and I run institutional distribution, as well as looking after the region. We service some of the largest institutional investors, I think, in the space, as well as those coming in, traditional asset managers, hedge funds, family offices. And we've just recently made a hire actually in the insurance and pension space. So we're quickly growing that business, and you'll see soon, hot off the press, announcement about us also launching execution services and OTC desk for our institutional clients.
Excellent. Well, we're going to be talking a lot today about that institutional client base, the one you have today, David, and perhaps the one that you're pursuing. And more broadly, where institutional clients are today. So you mentioned that you were at Credit Suisse for a while, and I think it's worth noting kind of what you did there, and then why you're bringing that type of, it's called talent experience, to BlockFi.
Sure. So my background is in banking and traditional finance. I think I started my career in hedge funds. I was really attracted at a young age to a trading environment. Realized that actually I fit in better in a sort of structuring and sales role. So moved to Merrill Lynch with another colleague who actually now runs the institutional side for BlockFi, and was there looking after a structured product and structured financing desk, which I started in London. Moved to Credit Suisse to do the same thing. But my last role was in ultra high net worth private banking and spearheading an effort to service sophisticated investors in the hedge fund space, private equity space, and family office space. So I think I have a pretty good handle on that audience, and it's also fits in very nicely with BlockFi's client base, because we have some probably for amongst fintech some of the highest kind of average account balances, and we like to think some of the most intellectual and well-educated people in the space in terms of their knowledge of crypto.
All right, so let's talk a little bit about why institutional investors, a new type of institutional investors, are coming into the space now. Many of the people in the audience have been at least investigating, if not investing, directly and indirectly in Bitcoin for years. What's different today that didn't exist previously?
I think it's an infrastructure thing. There's a huge amount of work behind the scenes that was done. Obviously BlockFi, we aspire to be, to be a part of that, of the move to institutionalization and professionalization of the crypto ecosystem. So you have firms that, really were just in the beginning stages of what they were doing. So one of our partners is Fidelity Digital Assets. So institutional clients, if they don't want BlockFi to hold their crypto, they can custody it with Fidelity, and they can get financing services off of the institutional desk against that crypto. So Fidelity was working hard to build that product for years. You've got firms like Chain Analysis or Elliptic that can perform some of the AML, KYC, and really ameliorate some of the concerns in terms of crypto being used for untoward purposes. So I think that the technology is far, far advanced over what was there in 2016, 2017, and the market's just sort of catching up and realizing that that crypto has come into its own and can be a place where institutional money can be funneled.
So David, what types of returns have investors seen in the various different types of products that BlockFi has launched? Of course, there's direct exposure to Bitcoin. That's one way, but there are lots of different ways to attack this space in today's environment.
Yes, so I think obviously we are BlockFi is known for people who are serious investors in crypto, who buy it, want to hold it, and earn a yield on it. And that's probably on the retail side what we're most known for. On the institutional side, we have a range of clients. Some of them are high frequency trading, proprietary firms, and they're just looking to arb prices across different exchanges or across different products between futures and spot, or futures and options, or options and spot. And then you've got hedge funds that have come into the space, and some sophisticated family offices. And what they look at, I think, are two of the two opportunities that I see that are present in crypto right now, because it's an emerging asset class and has not yet seen the influx of professional investors. There are some kind of low-hanging fruit opportunities where investors can make decent returns without taking an exorbitant amount of risk. One of those is that we engage with clients is financing fund shares. So for example, there are closed-end funds like Grayscale, Bitwise, and others that trade at a premium in the secondary market. Institutional investors can subscribe to them and receive the shares at NAV. They're locked up for a period of time. They can hold them until the lockup expires, sell them, and realize the premium. And the way that BlockFi has been involved is we help hedge that transaction so that the client doesn't want the price exposure to Bitcoin. They only want the exposure, Bitcoin or other crypto. They only want the exposure to the premium. We will help them to short the offsetting Bitcoin or other crypto exposure. Or we can take the other side, for example, of a futures trade if a client wants to short exposure that way. So that's one of the more, I think it's an easier to grasp, easier to understand, doesn't take a lot of, kind of infrastructure in terms of quantum computing or other resources that a high frequency trading firm might need. And it's a trade that hasn't become as crowded, because I think, as I said before, a lot of firms are looking at the space. They may not completely understand crypto. One of the first things they say is, how can I get sort of passive exposure to crypto? And then they look at the next scale of transactions, which are more in the arbitrage space.
And is there enough liquidity in the market? I'm talking about Bitcoin as the primary asset here.
Yeah.
For these derivatives to exist, if someone wants to take a large position, is that viable today?
Very much so. So if you look, for example, I mean, just taking, on Bitcoin, we've traded, sort of, in a single day for one client, we've traded about, north of 100 million. And that's possible to do over, a matter of hours through a VWAP or TWAP. And our friends at Coinbase, I'm sure, can tell you more about that. but that's something that we offer our clients, the ability to handhold them into a position. Also on, if you look at the fund side, if you look at, for example, GBTC, Grayscale trades sort of between 200 and 300 million dollars a day in volume. So there's a lot of liquidity as well. Also CME futures, where you have a AAA counterparty. You don't have to deal, if you're an institution or family office that's somewhat leery of dealing with an overseas exchange, you can trade on the CME through a prime broker or FCM, and there's easily kind of a billion outstanding at any time, and easy to get blocks of 5-10 million off. So I think that as we're talking about the evolution of the ecosystem, that's really changed, and the liquidity is much deeper than it was before as well.
We'll all be speaking with the gentleman from Coinbase later today to talk about those institutional products that they've developed. But where do we go from here, David? At this point, we've certainly seen a massive resurgence in the market. Although today happens to be a quote unquote down day in terms of the candles, for the most part, it's been truly extraordinary and the volumes are high. So what's next?
Yeah, I think that the next phase we're starting to get, I think, more institutional and particularly hedge fund interest in the space than I've seen before. Usually, obviously in the multi-strategy space or macro space, and they're looking to add crypto as one of the sleeves in their strategies. And as another sort of strategy that they look at would be kind of the futures basis arb, where just looking at a very simple buying spot, shorting a future, and earning the premium as you roll down the curve, and that can be somewhere between 10 and 20% annualized for taking very little risk, market neutral. You might have some risk against your custodian with the spot side if you're doing CME future. So I think we'll see hedge funds start to get into trades such as that, or transactions such as that, and some of the fund arbitrage opportunities that I also spoke about. I think the next phase, as we look at the options market, we see family offices come to us and say, I own gold mines, or I was a gold investor, big gold investor. I'm really interested in crypto now. And these are, anecdotal, but real life experiences. We deal with a lot of US family offices in particular. And we're seeing sort of like a fundamental shift away from gold. And, crypto's returned almost, 4x over the last year, whereas gold is up 20%. So there's a good reason why people are looking at it. I think at these levels, in the kind of 30K plus, institutions are a bit wary. They're getting the infrastructure in place. They're getting their custody. They're getting their agreements up, set up with BlockFi to be able to finance and trade. But they're looking and saying, actually, I don't want to rush in. I don't want to do this out of FOMO. I want to make sure that I get in at a decent level if they're a directional type of player. So I think, in terms of, it may not be the view of BlockFi as a whole, but from what we're seeing from institutional investors, I think Bitcoin may trade sideways for a while. I think, we've seen interest in, now when that happens, always interest in altcoins picks up, and different projects, more in the venture space. And then, the cycle sort of repeats itself after a while. But obviously Bitcoin's had a tremendous run. Ethereum looks like it's going to, have a resurgence with the adoption of Ethereum 2.0 and proof of staking, that it should certainly take some market share from some of the competitors in the space. It looks like it's still going to be the most widely adopted cryptocurrency in terms of it being used as a utility.
Well, let's talk about some of the other altcoins. On our previous conversation, David, we touched on the possibility that institutional investors are going to seek more than Bitcoin as a primary asset in terms of exposure to the sector. So what do you think are possibilities? Do you think there's going to be actual liquidity in these altcoins? Previously, it's been primarily the province of retail investors and perhaps people who are more like a venture.
Yeah. I mean, I think the main thing is that we see these coins launch. For example, you might see DOT, which is really surged recently, or Algo. these are coins that have launched recently, and they have a lot of volume. The question is, how long can that be sustained? And Chainlink is one that has held up decent volume over time. But a lot of them tend to be kind of the next greatest thing, and then fizzle out and volume disappears. So I think that from our trading desk perspective, we really want to see kind of 1 year trading history where the market cap is sort of nearish $1 billion. And that it's, at least trading, sort of 100 million a day, in volume, and, and that there's, that the sources of liquidity are reliable in terms of, the exchanges where they're trading. So that's kind of it in a nutshell. I do think there are some really interesting projects. I think, for example, Filecoin's a really interesting one. The concept of decentralized storage, so you're not relying on Microsoft or Amazon or other kind of hosting services, and having having that kind of risk on your enterprise. So and I think that one of the things that our VC friends like to say is that the nice thing about investing in kind of the more VC space in crypto is that when an investment doesn't go well, it doesn't go to zero, because there's usually some kind of liquid secondary market, and you might get, instead of getting zero back, you'll get somewhere between 20 and 40 cents back for every dollar that you put in. So the merits of investing in the ecosystem, I think, will bubble up to the surface, and we'll see more institutional adoption from those types of typical VC investors. And one of our lead investor in our Series A and B, Valar, we were their first crypto investment, and now they've actually made a series of crypto investments after that experience. So I think we'll also see that continue, and that you won't just have kind of niche VC crypto funds, but you'll have generalist funds allocating to crypto as well as an asset class.
One last question for you, and then we'll ask Nicolo if there are any additional queries from the crowd. But let's put back on your ultra high net worth wealth management hat for a moment. Would you be, if you were right now advising ultra high net worth people and family offices, would you be advising them to take a position in this space, understanding their risk profiles?
Yes. So as you can imagine, I get asked that a lot. So I think my advice to everybody is to go in slowly. I think it is worthwhile to get a toehold position in at least the top two coins, Bitcoin and Ethereum, and look to allocate, sort of on a once a month basis, and you can pick your timing around that in terms of when the market, has sold off. But it's good to start building a position, because the only way that you really get a feel for the markets is by having some kind of toehold position. And then when volatility picks up, there's a chance to pick your spot and make that allocation between a 2 and 5%. I think if wearing my old hat, usually alternatives would be somewhere between 5 and 15% of a client's portfolio. And so if you look at commodities, would be sort of with gold would be around 5%. So I think that's the right kind of allocation for Bitcoin, somewhere between 2 and 5%. And some people want to say, okay, I think it's going to go 4x from here. It's going to be 10% of gold's market cap. Just I think that for those who may not have invested before, it's important just to build into a position.
Excellent. Nicolo, any questions from the crowd?
So first of all, thank you very much also for this discussion. And yes, there are questions from the crowd. I would start with the first one. And in terms of institutionals, there are a few company names above the pulpit, but is there really a big move? Institutional looks slow to move still.
Okay, I guess that the question also is it on the buy side or on the sell side? If you look at the sell side of banks, Nomura has a JV with CoinShares called Komanu. Standard Chartered also launched a custody product, which I believe they're JVing with Northern Trust. And then in Singapore, one of the largest banks in Singapore recently also launched a crypto exchange. So I think that there's definitely, from the banking infrastructure perspective, it's coming. And obviously, there's been rumors that Goldman is starting or will launch a custody operation fairly soon. On the buy side, I think there are definitely people in the space. They're less public about it. I think that you've got Skybridge recently launched a fund for institutions to be able to come into Bitcoin. Paul Tudor Jones, I think, probably kicked off the bull market last year when he came out with his investment note. Obviously, famous American investor, and I think there's others that I can't disclose the names, but if you look at kind of the top 10 asset managers in the world, I would think about 8 out of 10 have definitely are looking at blockchain very seriously, and you'll see something come out in the next year or two.
Actually, just a quick Paul Tudor Jones went and made an investment in the space, and it became quite publicized in trade media. Do you think that has reduced the career risk for others who are endeavoring in the space?
I think absolutely, and then the follow-on with other people in the space who have invested, and I think behind closed doors, there's a whole crew of hedge fund owners and founders who have exposure to Bitcoin that you wouldn't necessarily know of, and they're not public, but they're there. So I think it's we're going. I think in 2021 we're just going to see a progression of announcements in terms of firms looking at being involved in the crypto ecosystem.
Yeah, that was also my question. So from your point of view, I mean, we heard it also from Michael Sonnenschein that more and more institutionals came in. So what is your expectation? Is 2021 the year of institutional investors? Or would you say, okay, no, that's maybe 2022 or 2023? So what are your expectations there?
My expectation is that 2021 is definitely the year of institutional investment. If you look at, I think in March of 2020, the question was, will Bitcoin still be around when it crashed to sort of 3,500 and came roaring back? And you had a whole slew of news in terms of including regulators like the OCC give permission to banks to custody crypto, to use blockchain payment rails. I think that the momentum is really there. PayPal obviously giving access to crypto to the masses. So it's in the coming months we'll see, and obviously it also depends sort of a bit on price, but we're going to see a lot more announcements coming.
Okay, perfect. So I would conclude with the last question, and that goes also into like the institutional investors. So have you already seen sovereign wealth funds interest in investing, or are there already some in?
That's a really good question. I think so. It's a space that we're in discussions with a couple of different players in that space. We haven't seen, to my knowledge, I haven't seen one invest yet. I
do you expect some? Sorry to interrupt you, but do you expect that they come in 2021?
I think so. I think yes. Okay. I think so. Wow. I think you'll definitely see. The difficulty is now that it went from something where, and this is what one hedge fund manager sort of said to me, is like, it went from something where you might get fired for looking at crypto to now you might get fired if you don't look at crypto, based on the technology and the returns that it offers. And it hits on two themes unfortunately, in the time of the COVID pandemic. It's a new technology, and it's also a way to defend against devaluation of local, of fiat currency. So, it's just too important to ignore.
Perfect. So also here, David, thank you very much for sharing your insight with us. And together with Michael Sonnenschein comments, I think we got a pretty good overview of the investment landscape and what we can expect in 2021.